Hello and welcome to a brand new edition of Inside Out on the Road, a show where we focus on individual stocks with in-depth analysis, deep dive into the financials and tell you about the key risks and triggers going forward. So let's not waste any time and get to our first stock today. My colleague Nigel gets us this very special deep dive on Varroc Engineering.
Well, Varroc Engineering, that's the stock on our radar. It's an auto components company who manufactures and supplies electrical electronics, polymers, metallics and exterior lighting systems to OEMs with end-to-end capabilities across design, development and manufacturing for 2, 3 and passenger vehicles. They also are into commercial vehicles and off-highway vehicles worldwide. Well, they have around 36 manufacturing facilities across the globe, which includes parts of Europe as well as Asia. As you can see, their clients list is spread across categories, but let's break it up into a little bit more detail. Well, their largest exposure is to 2- and 3-wheeler space, and last year was a difficult year as the 2-wheeler space saw a degrowth of around 3% as exports were impacted by geopolitical issues and domestic demand was impacted due to lower consumption in rural areas. But now they can potentially benefit as there are early signs of recovery in rural consumption and a solid domestic economy bodes well for a good showing in FY24. Well, Bajaj Auto as well has been talking about things bottoming out, and that's their largest client. But geography-wise, 18% of their revenues come in from outside India. Financially, things have been improving actually, and they ended up delivering an EBITDA of around 550 crores in the past year. But in the past few quarters, well, they've been clocking around 150 crores per quarter. Can they move into double-digit margins? Well, that's something that the street is waiting for. This has lower input costs and operating leverage plays out in their favor. Below the operating line, the street will also be looking forward to some relief on the interest cost front. They've reduced their debt, they've deleveraged their balance sheet as well, and the management says that better operating performance has aided their ability to service debt as they reduce the overdue to their suppliers. In the past, they've deleveraged their balance sheet by selling their 4-wheeler lighting business to a French company. So the company says the order book is around 5,200 crores, and out of this, business wins from 7 prominent electric vehicle customers total around 1,800 crores. Well, their revenues from supplying to EV customers in FY23 was around 100 crores. That was just 1.5% of their total revenues. On the valuation front, well, there is some comfort as it trades in line to mildly lower in comparison to their competition. Their shareholding pattern as well comes up for you on the screen. But that's just a brief about the company. Let's get chatting with the Chairman and Managing Director of Varroc Engineering, Mr. Tarang Jain. Well, Mr. Jain, you know, in the past year, that's FY23, there was a lot of talk of supply-side issues impacting business. And businesses like yours. Are things much better right now?
Yes, Nigel. The supply side issue will largely do with semiconductors. But I feel that situation now in Q1 is much better. And I think the reasons are twofold. One is that, in the developed markets, which is more like Europe and America, we see an easing of demand. Okay. And that's helping. That's one point. And secondly, we as a company have proactively worked with all our customers in developing alternate bill of materials on the electronic side to de-risk the supply chain.
Okay. All right. So the supply side issue is getting sorted out, which is good news. But even in the past year, Varroc Engineering, it was impacted by a bit of global slowdown, a little softness in global demand. And also, since you have a lot of exposure to 2- and 3-wheeler space, there was some bit of softness because rural India was struggling. Now are you seeing signs of things improving on ground on the demand front? Bajaj Auto goes on talking about things bottoming out, so you could be a potential beneficiary. Tell us more.
Yeah, so see, I cannot give, any comments on individual kind of customers, but overall I can say that, the quarter one has been a robust demand for us overall, which is also, and I think this is the reason also has been that last 5 years, we have been following a content growth strategy.
Okay.
So therefore, we are very confident that whatever the market growth may be, we are going to be growing much faster than the market growth. And that's what we see in Q1.
EV, that has been the buzzword, not just in the last few months, but the last few years. Now, some part of the stock market they are a little bit skeptical. They are saying that maybe some part of Varroc's business will not be required in a post-EV world, for whenever that is. Could you tell us, as a percentage of your total revenues, how much of that will not be required, which is core ICE driven?
Yeah, so Nigel, see, you may know that, we have been very self-sufficient when it comes to technology. Over the years, we're not really dependent, on competency in technologies on anyone. And we have started building R&D, many years back. I think I would rather, think about it not from a product line, on a product line basis, but more from a competencies basis.
Okay.
So I think we are very well placed. We are not really kind of concerned, that there's going to be, some kind of a risk, because of the conversion to EV from ICE.
No, but the market believes that there is a percentage of your business that will not be required in the post-EV world. So you may say that you are gearing up for the post-EV world, but what part of your business, or do you think that, you could easily start moving to the EV world? Those products that you're making code for ICE, in a post-EV world, you believe that you can switch it
so
to
let me clarify, the content, EV vehicle for us is 10x that of IC engine.
Right.
For example, if we are, a content on an average in a 2 and 3 wheeler is about 2,500 to 3,000 rupees, it would be 25 to 30,000 rupees when it comes to any EV vehicle. So that's what gives us, what gives us a belief and a confidence that some of the parts may be more on the metallic side. I would say maybe do some of the transmissions, or the engine bands. That's where, there could be a transition, but it will take some time. But that's a very smaller part of our business. Okay.
Well, Mr. Jain, what about EV? EV as a percentage of your total revenues has been only around 100 crores, I think, in the past year. But clearly, you have focused out there. So, say in the next couple of years, where do you see this number headed? EV contribution to your revenue?
See, I can only say, I won't give a number.
Yeah.
But I can say that, we will grow much faster than the growth in the EV market.
Okay.
Because of the content again. So we are looking forward to a good growth when it comes to the EV segment, and that's more for Varroc an opportunity. Moving forward rather than a risk.
Do you expect to outpace the market growth? If yes, by what percentage?
So I think that, if the market grows at, let's say, 4 to 5%, we will surely be, at least 5 to 7% more.
Right. All right. And on the EV side of things, would you be looking to bring in a technology partner, or do you believe you're equipped? You'll have enough within your team?
We are self-sufficient.
Okay.
So we're not really looking at, some outside collaborations or, joint ventures as such.
Okay. All right. Well, Mr. Jain, it's good to hear that you've had a good start to FY24. But the stock market would like to know what kind of a growth can we look at this year. Last year, you did close to around 6,800 crores approximately. On that sort of a base, what is the growth you're looking at? Is a double digit gettable this year? Will you be in the vicinity of, say, 7,500 to 8,000 crores? Gettable number?
Yeah, it's a gettable number. And all I can say is I can't give, some forward-looking numbers. But definitely, the way we are positioned today, we are growing much faster than the market. And this is helping also operating leverage.
Right.
So therefore,
profitability will improve.
The profitability will improve. Of course, a main matrix is our return on capital employed, which last year was around 18.
Okay.
Our target is at least to reach about 25. Okay. And also the margins front, we feel, we did an 8.7% EBITDA last year, but we are hoping that in the short term, we can achieve this double-digit margin.
So double-digit margins, say, somewhere midway through the year, is it gettable?
I think it is possible. I would say more towards the end of the year. The second half is something what we are striving to.
A couple of other aspects. The ROCE, you're saying you're at around 17-18%. You're looking to take it to 25%. By when?
So this is also something which is a target. I think probably within the next 1 year to 15 months is what we are looking at.
Outbeating the industry in terms of revenue growth, margin improvement from year on, and ROCE to the mid-20s. That's something
what our target is.
That's something what you're targeting. Now the other aspect is the debt in the books. You've made efforts. You've sold the part of the lighting business. to a European, to a French company, and you've reduced debt quite a bit. Is there a further debt reduction target that you have from here on, from these current levels that you're sitting on?
Yeah, surely, definitely, and see, today we are looking at, like I said, already at a margin improvement.
Yeah.
Because see, our capacity utilization today is about 60%.
Yeah.
Now we're looking at a revival in the market which would help, grow our margins. So, so that is one thing. At the same time, I think we're looking at so our capex is about 200 crores still.
Right.
But we're looking at, a better working capital management, to improve our free cash flows.
Right. But on the debt front, last year I think we were close to 1,300 crores. So do you see that number head towards 1,000 crores given that you have 200 crores of capex?
Yes. So basically, see, end of last year we were a little bit over, our debt to EBITDA was a little bit over 2. And I feel in the next 12 to 15 months, you can bring it down to 1. That's what we are going to strive for.
Okay. So an absolute debt number, could you guide us, sir? You want to keep it at that?
I want to keep it at that.
All right. I wanted to probe you further on this EV part of the business because it's good that you've grown exponentially. But what about profitability? Is there a margin difference between the IC or the business that you're currently doing and the EV business as well? Is there any kind of margin difference?
I would say it's either similar or this lower because the content is very high.
Okay.
In an EV product.
So EV will add more to the revenue aspect.
I think it will help us more on the ROC front rather than on the margin front.
And this 200 crores capex that you're looking at, is there an incremental revenue potential from here, or is it more to enhance your current capabilities itself?
No, not really. There could be some, enhancement on the engineering side, but largely I think it is towards the new programs one, and there is an investment required there, of a different kind, which other than the spare capacities we have in our plants today, is other than that. It's investments, which don't only exist. But at the same time, we are looking, that how do we get in some more existing products?
Okay.
Through cross-selling.
Right.
From various customers to enhance this utilization of capacity, which is at 60% today.
Okay. And last year you did 6,800 crores. You were looking at, good growth this year. So you'll be in the vicinity of 7,500, 8,000 crores. That's what the looks of it. At peak levels, with your current investment, let's say small debottlenecking, what is your peak revenue potential that you can look at?
Look, I said 60%.
Yeah.
And you can just proportionally look at if you were to do 75 to 80%. Definitely there can be at least a 20%.
20% higher
upswing, yeah.
So say around that.
With a similar investment, but it has to be for similar products.
So at the peak level, say you can do roughly around 9,000 crores. Would that be a decent number if demand is stronger?
It's possible.
All right. Mr. Jain, there's a Chinese JV that you had, and the street's verdict seems split. Some part of this believes that maybe if you exit this JV, it will be good, and some part of that believes that maybe you will not get the valuation at current reckoning. So what is the plan with the JV, the Chinese JV that you have? How do things stand as of now?
So, China for us is a very important market. As you know, it's the largest market for four-wheelers in the world. And we want to be there.
Yeah.
As a company, we want to be there, and so does our partner. The JV is a 50-50 JV.
Okay.
And our partner there also wants to be, a part of the Chinese market. Nobody wants to really, kind of exit the market. So we have 2 plants over there in China, and the understanding with them is that they'll take over one plant and we'll take over the other. Okay. So presently we are in discussions with them for the split, and we are hopeful. We have been discussing for some time, but we are hopeful that that we are able to kind of find a solution.
Okay.
And an agreement before this financial year.
And are they on board for this agreement that you'll have put out on the table as of now, or is there still some deliberations?
There's still some deliberations which are going on, but we are hopeful of finding a solution.
Could the solution be that both of you will come on board and look to exit it, or you'll both want to be part of that market?
No, both of us will not be exiting. I think both of us want to be a part of that market because other than the four-wheeler lighting business, as far as we are concerned, we also want to do some electronics more on the ADAS side, where we have, already developed a lot of these electronic products.
So as of now, you all both are looking at some kind of deal being worked out between you all rather than exiting this particular JV.
Yes, that's right.
Okay, let's come back home then. There's this PLI scheme that's been introduced in a lot of sectors, including auto. And you all are one of the approved companies out there. Could you tell us what does it stand at as of now? What is the total money that you all have committed?
Yeah. So, yes, our PLI scheme has been kind of approved by the government to take it forward. But it's still in process for it to be approved by the ARAI. So we have committed an investment of 280 crores towards this PLI scheme, and out of which we have already invested close to about 85 to 90 crores. So once we get the approval from ARAI, I think that we can start getting the claim. So the basic idea is that how we able to achieve the recovery of this investment.
Okay, Mr. Jain, before we wind down then, the last few years have been plenty of promise on the business, but somehow delivery has been a little bit short. Shareholders out there want to understand whether or not Varroc business prospects from here are on an upswing, and what is the message you could tell your shareholders? Some of them have been rather patient. You had a great year a few years ago, but you never replicated that performance.
No, I actually agree with all the investors, and yes, we have not performed. When it comes to the last 4 years, I would say, we've not performed. We have had two major businesses. One is our India business, which I would say has performed, but that was a smaller part of our business. The larger part of business was the four-wheeler lighting business. But that's where we have seen that slowdown, especially more, post the lockdown. And even before the lockdown, I would say there was a slowdown which was already happening. And that obviously has impacted our businesses, in the developed world, which is more the China, more the Americas and Europe. And that's why we decided that, we should probably sell that part of the business on the lighting side, which is 80% of overall revenues. So now I would say our focus is largely more on India and on Asia, which would be Vietnam and also in China and somewhat also in Europe. So Asia, as we see, is going forward will do better than the developed world. I see it in the next 3 years that the growth will be more, So now I think we're very well positioned. India, where we have always done fairly well, is the largest part of our business now. So we are confident of our business going forward. So I would just tell all our investors, please keep the faith.
Is the best yet to come from Varroc Engineering?
Absolutely. Absolutely.
It's been a pleasure talking to you, Mr. Jain. Thanks so much.
Thanks, Nigel. Thanks for coming over. Thank you.
Okay, that was a deep dive into Varroc Engineering, but time to slip into a short break. We'll come back with another interesting stock. Massive on Talk is in the spotlight on the other side.